Alright, what it do, YouTube? In this video, we're going to be going over why dollar cost averaging never fails. Let's get straight into it. So before I go too far ahead, I know I haven't posted in quite some time, but I just don't want to become one of those trading channels that post, 3 to 4 weekly videos all on the same topic on a bunch of different strategies, on a bunch of repetitive content. I feel like for the most part, I've made all the content I need to make to help you guys out. I feel like it's pretty replayable. The situations still show up time and time again, and how to execute, key levels, supply and demand, the 90 EMA, stuff like that. There's really no reason for me to keep on making the same video over and over, just to, soak up ad revenue. I either just make videos, when I get inspired to make videos, or when something significant is going on within the market. And right now, I think that there's some things going on within the, Nasdaq 100 in particular, and within the stock market, and why dollar cost averaging, into the stock market last year was a pretty profitable strategy, to say the least. So let's jump into the charts, show you guys some numbers, and then we'll be on with our day. Let's jump right into it. The first chart I want to cover is the Nasdaq 100. So you can see clearly the market fell from highs of about 16,750 down to lows of about 10,650. And this entire way down, if you guys were on Twitter, on YouTube, people are saying, the market's going to go down to pre-COVID highs, the market's going to crash, we're going to do this, we're going to do that. But you know what I did? The entire way down, yes, I mean, this whole way down was pretty hard to watch your portfolio fall, 4, 5, 6, even more than that % some weeks. Dollar cost averaging into good companies, and especially in the index funds, has been the most profitable strategy since the stock market's been in existence. I like to, keep numbers on my side. So when something continues to work, time and time again, I think it's the best strategy. During this whole way down here, people were telling me, why don't you put your money in the bonds? Why don't you do this? Why don't you do that? And personally, it depends on your time horizon. Now, if you're just an intraday trader, trading 5 to 10 minute intervals, then yes, I mean, you might not be holding or buying and holding for the long term. But for me personally, just recognizing that the market typically doesn't fall 30-40% in the course of 9 months, and you may never see an opportunity like this ever again. You just have to take advantage of what's in front of you. So yes, I could have put my money in the bonds, made 5% returns, and held them to maturity, but I don't really think that's worth it. I'm pretty young. I'm 24 years old. So I figured you might as well just, dollar cost average, keep deploying capital into the market every single day, every single week. So this entire way down, up until the market bottom down here around October, November, I was dollar cost averaging in. I still continue to dollar cost average in. No matter where the market's at, try to put upwards of $1,000 a week into the stock market, just so I'm always planning ahead. Like I said, my goal isn't to become a millionaire overnight. I just want to build wealth, or try to build wealth in the stock market, whether that be by holding strong tech companies and continue to buy them for the long term, letting them do their thing, or just dollar cost averaging in the index funds like the Nasdaq 100, QQQ, or something like SPY or VTI. The numbers are on your side. So regardless of what people are telling you, it's been a great start to the year. If you've been dollar cost averaging in this entire way down, I'll pull up a picture of my percent returns year to date in my long-term portfolios and stuff like that. So far at the time of this recording, I'm up about 55% year to date on my portfolio. One of the best starts of the year for the Nasdaq that I can remember. I'll have to go back and look at the numbers, but pretty good start to the year. Now, am I saying you're going to go all the way back to all-time highs by end of the year? I'm not saying that. Or am I saying that you might not, that you're going to go back below 10,600 on the Nasdaq and break below these lows and establish new lows? I'm not saying that either. As long as you're consistent, have a consistent investment strategy in something that you're comfortable doing. For me, $1,000 a week is a number I'm comfortable investing in the market. It's money that I don't need right now. It's money I don't need for car payments. It's money that I can invest into my future and just buy good companies and buy good stocks right now. And hopefully my money will grow. So that's just my plan right now. And so now we'll just take a look at Nvidia really quickly, and then I'll just show you guys some of the stuff I'm looking at right now. So I think the chart on Nvidia kind of speaks for itself here. I made a video down here in October around this date. I'll pull it up right here. Let's just play a quick clip on what I said about Nvidia. Even go lower than this, but I think the upside potential for semiconductors and everything Nvidia is doing with the data centers and AI, pretty limitless, or you could say Mr. Unlimited, like Russell Wilson. I think the upside for semiconductors and Nvidia as a company is really promising. So that's why I continue to dollar cost average in every week. I buy a couple shares, 2 or 3 shares. Every month I buy about 10, 15. And if Nvidia ever returns back to all-time highs, if it comes back here down here to $74, that will yield about 360% return. So if you ever see Nvidia down here at the $74 region, I think it's a great buying opportunity. You may never see Nvidia down here at these levels again. Of course, you could continue down lower, but for the long term, 10, 15, 20 plus years, I believe you'll see Nvidia above 350 in the next decade. So that's why I continue to buy it, and that's why it's the biggest holding in my long-term portfolio currently. So yeah, I made a quick video about Nvidia down here at 120, 125. It was somewhere in this candle. It was kind of interesting because you bottomed right off here at 107. I think it's safe to say Nvidia bottomed. If you ever break below 107, something's going on in the world that you should be concerned about. But yeah, I mean, clearly Nvidia went from lows of 107 to highs of 400, nearly 395. It broke past all-time highs. It continues to go straight up. And this entire way down, what were people saying? They were saying the PE ratio is too high. Nvidia has to go lower. Nvidia has to drop down to $50. But this entire way down, I just kept on buying more. Eventually, Nvidia broke back over 200. I started feeling good. It broke back above 234. I started feeling even better. So 8 months since making that video, you went from lows of 107 to highs of $400 on Nvidia. So if you bought the dip here on Nvidia, you're up about 200% in your portfolio. I know for me, speaking from personal experience, Nvidia's been the best performing stock in my portfolio, clearly. Even going back to 2021, back here, this whole run before Nvidia inevitably dipped. Nvidia's been a really strong company, a great performing company. I was already pretty interested in the fact on what they're doing with AI and data centers. And this was kind of before the boom in AI and popularity with ChatGPT, stuff like that. So just kind of having the foresight to look into companies that are going to be big players in that industry and in that field and can pivot their business is something that really interested me. So sometimes, like I said, going back to dollar cost averaging, you also have to have some belief in the company. If you're just buying meme stocks that really have no future ahead of them, yeah, dollar cost averaging may not work out for you. But if you're buying companies that have shown promise, I mean, just zoom out to the monthly time frame here on Nvidia. Nvidia over time, yes, it's had some ups and downs. Let's turn on the log scale really quickly. So if you turn on the logarithmic scale, it kind of puts things in perspective a bit more. So yes, going back to 2000, the dot-com crash, it's had some ups and downs. But if you just bought and held Nvidia all the way back here, even if you bought the top here at $6 back in February 2002 and went down to 50 cents, yes, you're down pretty bad. But over time, the stock eventually recovered if you just dollar cost averaged in. Same thing with 2008. It peaked out at $10, dropped down almost 90%, just dollar cost average in. The stock eventually recovered. And same thing going back to 2020, 2022. Yes, the stock fell about 50% from all-time highs, but dollar cost averaging into good companies and good stocks, the stock eventually may cover. And like we're seeing right now, perfect, bounce off of 107 here on Nvidia, and the stock, overshot all-time highs at 346, and now it's sitting around $400. So I'm pretty happy with this. I'm pretty happy with my decisions all of last year to dollar cost average in, no matter how bad the portfolio may have looked at some point of time and how, and what people were saying on Twitter that the market's going to keep going lower and this and that. You just have to block out the noise sometimes, ignore Twitter, ignore these stock market YouTubers, and just keep dollar cost averaging in the companies that you believe in, which is what I will continue to do. So that's Nvidia for you. So before we wrap it up here, I just want to go over buy and hold investing versus market timing. What's the difference? So again, just by buying and holding in the S&P 500 here, you can see here some research conducted by Charles Schwab between 1926 and 2011. A 20-year holding period never produced a negative result. It just kind of goes to show, especially if you're buying, Spire, QQQ. Yes, the Nasdaq technology may be a little bit more volatile. And like it says, if you hold 20 years, the range was 3.1%, depending on when you buy and stuff like that. But the shorter your time horizon is, the less you hold. That's when you start seeing wider ranges. So you can see if you held the S&P 500 for 1 year, you had some returns as high as 54%. But if you panic sold at the bottom and didn't hold longer than that, you could have seen some returns of negative 43%. So buying and holding, just investing in good companies you have belief in. Again, not buying meme stocks and holding, not buying garbage companies and holding, buying solid index funds and solid companies with strong fundamentals. You're going to do pretty well and better than most day traders. Most people who just go in and out the market really quickly and don't have a long time horizon. So when it comes here to market timing, I'm sure you guys have seen on Twitter, people are going to time the bottom and they're trying to catch the bottom. All those people who are trying to time the bottom, Missed a 4,000 point move on Nasdaq, a 40% move year to date so far. So that's kind of unfortunate for them. You can see here, if you just bought the S&P 500 index and held it without selling or doing anything, you still would have got a 7.8% return year to date. And then if you try to buy and time the market time and time again by just not being consistent and not having an investment strategy, just by missing the top 40 days throughout the year, there's about 250 days the market's open. Just by excluding the top 40 days, and let's say you didn't time the bottom, you didn't time the top exactly, that would have got you a return of about negative 2.3%, excluding just the top 40 days. So again, just goes to show, just being consistent with your strategy, just dollar cost averaging in every single day is the most effective strategy. It's the most profitable strategy at the end of the day. Yes, some people, some traders online may outperform the market, but it's just an anomaly. Most people who just want to be investors, they're going to be well off just by buying index funds, matching the market, not trying to outperform and not being too risky. Just by buying index funds and good companies, you're setting yourself up for wealth better than 90% of the people who aren't invested at all in the market. So hopefully this video, shed some light on what's going on within the stock market. Showed you that buying and holding can be pretty profitable if you guys don't panic sell the bottom or start panic selling at the top or something along those lines. If you guys like this video, be sure to drop a like and comment below and stay tuned for the next video. Thanks for watching.